This is NISM Certification Exam 5B Mutual Fund Foundation. We are on the 10th video today, and the topic which we are going to discuss is real estate as an asset class. When we talk about asset class, it means a lot of assets. If they have the same property, they can be grouped together into a class called as asset class. So real estate is an asset class. So let us see what all assets can fall into asset class real estate. When we talk about the asset, we are talking about investments. So I can buy a piece of land that can also be included in real estate asset class. This circular boundary says that all these investments or all these assets are within the asset class of real estate. So they mean they are of the same class. Flats is also in real estate asset class. Villas, shops, fractional ownership, which SEBI has approved now very recently, that also comes into asset class. Commercial property, REITs, which is type of a mutual fund, but instead of investing it into stocks, they invest into real estate property. So all these types of assets or investments, since they have the same property, they fall under asset class called real estate asset class. So what is an asset class? They are different assets, like we have talked about land, flat, villas, shops, which have the same properties. So it is an asset class. That is the reason why it is called as asset class. Let's come to the next point. Real estate asset class is a very important and a very popular asset class. It is not because it is simply seen from investment point of view, but it is popular because it is also seen from a lifestyle or living point of view. When we see real estate from lifestyle living point of view or from lifestyle point of view, then it is called as an expense rather than an investment. Why it will be called as an expense rather than an investment? Because in investments you get returns. In investments you get returns which can be in the form of rental income or sale value of the self or the sale value. But when it is a lifestyle investment, then it has no rental income because you are staying. It has no sale value because it is self occupied. It becomes an expense. So lifestyle purchase of real estate is not an investment, whereas if you are using it for rental purposes or you are holding it and then selling it for from that point of view, then it becomes an investment asset class, or it becomes an asset class or an investment in nature. So this is the point which you should understand. Now let us see what all investments or assets fall into sorry the assets or the investments which fall into real estate asset class. What are their traits or their properties? So we are going to discuss those traits and properties, whether we are buying a land, we are buying a flat, we are buying a bungalow, or we are buying REITs, or it is a fractional ownership or commercial property. They will have the characteristics which I am discussing it right now with you. They all will exhibit these characteristics, and since they exhibit these characteristics, that's why all these assets or investments form a group together under the heading real estate asset class. First is the location. The better the location, the better the sales value. So location and sales value is directly proportional. This is a sign of being directly proportional. So if the location is good, means you will get a high market value. You will find that people will say, see, my property does not have a good location, and that's why I am not able to get a lot of buyers, or I have to sell it at a lower price as compared to a property at some other location. So location becomes very important. If you will look at real estate, you will see that एक रोड के लेफ्ट साइड में अलग दाम हो जाते हैं, रोड की राइट साइड में प्रॉपर्टी हो तो उसके अलग दाम हो जाते हैं. And that can be a premium which can be at least 30% to 40% higher than on the left side. So this is the difference of location in in real estate. Real estates are illiquid. When I say illiquid, suppose you have invested in a mutual fund. If you don't want the mutual fund at some point of time, you want to exit, just press a button, call up your broker or press a button, and the mutual fund gets redeemed at a given price for you. It may take 1 or 2 days for the money to come in. That is a separate issue, but you don't have to wait to get a seller who will buy from you and then you liquidate your mutual fund. You don't have to search for a seller. But in real estate, you need to search for a seller. You can't sell a property on a click of a button. You have to look for a seller, and then there will be a lot of elaboration, visits, and other things. A lot of people will be involved. So it is fairly illiquid in nature. You don't get instantaneous buyers. It may take few days or years sometimes to sell a property at a reasonable price as you are expecting. It is not a divisible asset. I will again come back to the mutual fund. Suppose you have 100 units you have purchased in a mutual fund. You can redeem 1 unit, you can redeem 10 units, you can redeem 20 units, and 80 units can still continue to remain invested. But in a property, suppose you have bought a flat, you cannot sell one room of it, you cannot sell two rooms of it, you cannot sell the roof of it and the floor you keep with you. Like this you cannot do. So it is not a divisible asset. Fourth point which is seen is this type of asset class, you can hold it in a physical form as well as in financial form. When we say financial form, it is in the form of terms and conditions, and it is in a demat account now, or there are terms and conditions written on a piece of paper, signed and authenticated. So, or in a demat account, which happens now. Earlier it used to be in the form of paper with terms and conditions mentioned over it, signed and validated by the person, by both the parties, or by the person who is taking the money or giving the money, whatever the case may be. However, the physical asset form and financial forms both exist. In financial forms, the best example is REITs. REITs is real estate investment trust. They collect the money from a lot of investors and then go and buy a property, and you can redeem your units like you have units in mutual fund, equity or bond mutual funds, or money market mutual funds. In the same fashion, you can redeem your units in REITs also. The fifth point is it generates returns. Any investment will generate a return, that's why it is an investment, but it generates two types of returns. It generates capital gains as well as current income. When we talk about capital gains, you have bought a property of 1 CR, it will sell at 1.25, 3, or maybe 0.8, whatever the case may be. So that is a capital gain. And current income is the rental income which you get from the from your property. That is the current income. So when all real estate asset class investments will generate both type of returns. There is high transaction cost. This is a very important fact, because if you have bought a real estate property, first you will have to, for buying you will pay a 1% brokerage, for selling you will pay a 1% brokerage of the total market value of that investment, plus there will be registration charges which you have to pay to the municipality, which is also very expensive. It is not a small amount in few thousands, it can run in lakhs. So all these things reduces the return on your all these expenses reduces the returns on your investment. The percentage return falls down because of all these things. So this factor 6 also has to be considered. And the seventh and the last factor, which falls true to all investments under the heading real estate asset class, is high maintenance expenses. When we say about high maintenance expenses, it has got breakages in it, because of which repairs have to be done. So repairing, reconstruction, modernization, all these expenses are involved because they are structures. It can have problems in it that has to be rectified. Then there is the tax implication. Suppose you have three different houses you have. So as per the income tax, one house which you have occupied will be a self-occupied, you don't have to pay a rent on it. But the other two properties, whether you have rented them or not rented them, your tax on the as per the income tax, fixed amount of rent is calculated on that, and that rent adds up to your income, which becomes a taxable income for you, and you have to pay tax on it. So taxation is also a high expense which you have to pay on these properties, which has to go on a regular basis. So you have to ensure that that also happens. So and then there are many other expense costs, like you have to keep security guard to ensure if it's a piece of land, you have to do some constructions and blah blah blah. So these are the 7 points which makes a real estate asset class. All the assets having these 7 points will be called as a real estate will be called as real estate asset classes. Now that is all for this video. In the next video, we will talk about commodity asset class. When we use the word commodity, what type of products are we talking, and what is the characteristics of commodity asset class? That will be discussed in the next video, which will be video 11. Till then, thank you.